Good morning. Welcome to Bazaar Morning Call. It's the last day of the trading week and I'm Sonia Shenoy. With me is Nigel D'Souza and Lata Venkatesh. There is volatility in this market. No two ways about that. We saw it last afternoon when the market had a sharp intraday rally and closed in favor of the bulls. This morning looks like the bulls will further tighten their grip on the market. But there's so much to talk about in the global markets as well. It's been a bit of a mixed day. We'll talk more about that. For now, the start looks well in the green. Folks, morning. Lata, morning to you.
Good morning, Sonia. I would think that the data that came yesterday backed the bulls. I mean the US GDP data. It's a Goldilocks data. Growth higher than expected, inflation lower than expected. What more can you ask? GDP growth was expected to come in the second quarter, the quarter that ended on September 30th. The number was expected to come in at 2.3. It's come in at 2.6. Now, there is a GDP deflator because, when you count the GDP amount of goods and services, you take it at today's prices, then you deflate it to the actual amount of goods and services so that you remove the price effect. That price effect, it's called by various names, they call it some chain of prices index. Basically, it's the cost of living index. If you deflate it, then that inflation comes lower than expected at 4.1. The market feared it would come at 5.3. Headline inflation is also lower than the previous reading. So for the markets, it's a very good reading. The other two things which I want to point out is there have been some senators writing to Powell asking him not to go ahead, to remind him that he also has an employment mandate, not just an inflation mandate. So yesterday, the note went from Senator John Hickenlooper, writing to Powell saying, you must consider the negative impact of raising rates. And just the day before, another Senator, Sherrod Brown, had also written to Powell. Now, the Fed chair doesn't regard these. He has a mandate and he obeys it. But it just shows the ambience. It has an important noise impact. And all this is adding to the market's thinking that while November is a 75, December, they will have to bring it down to about 50. It can't continue at 75. So all these are aiding the bulls. Yes. The impact of the inflation reading was very clearly seen in the bond market. Now 4 is over. It's at 3.9. And that's also leading to a slightly weaker dollar. All these are emerging market positive, India positive. The only negative, which I think you all are going to talk about in greater detail, the tech results. Yes. Yeah. All of them indicating that, GDP is the lagged number. The next number will not be very good because the tech industry, tech sector companies are clearly pointing to greater slowdown. What do you say? And
every one of them, right? There's not even one big tech company that is spared. But I take your point. This morning, the SGX Nifty is indicating that the start will be well in the green. And you know what? The positive US GDP data, the fall in the dollar index, have all led to the Dow rising for 5 straight days. So the Nasdaq is a different issue altogether, but the Dow Jones has been in the green for 5 days. Yes, tech stocks are under pressure post weak earnings. There's weak guidance from Amazon that has added to the pressure over there. In fact, in after hours trading, Amazon was down 16%. This is the biggest decline that the stock has seen since way back in 2006. And Apple has seen weaker than anticipated, iPhone revenues as well. So that's one part of the market that's not fixing itself, so to speak. But for our own market, the bulls have had a firm grip, and it looks like that grip could get tightened. One thing is for sure that the 50-day moving average of 17,500 is now a firm support for the index. We had a fabulous October series where the Nifty rallied in excess of 900 points. That's a 6% gain. And there was large buying by FIs overnight as well. Over 2,800 crores of money is what FIs bought in the cash markets. And DII sold a bit, about 1,600 crores or so. So in all likelihood, the market will start in the green. We'll take it from there. Financials have been doing very well. This week has been great for a couple of other pockets as well, including names like defense stocks, etc. So there's been a big comeback in mid-cap IT as well. So we'll keep our radar on all of these stocks. But Nigel, looks like the bulls have it even today.
Well, that's right. The bulls have it, but I'm only a little bit cautious because we're going to that 17,800, 17,850, and we're seeing a U-turn. Last 3 sessions, that's precisely what's happened. We get the highs up for you on the screen. So I think till we cross that 17,850 odd mark, then I'll be feeling a little bit better. But for the time being, the bears, they want to defend that mark. And at the start of the series, a new series today, the FI positioning is interesting. It's an absolute contrast from what they started, the October series. And remember, the October series was a good one. So they were net short that time around. Now they're net long. So I said, let's put out some data then. The last few series at the start of the series, when they are net short, in fact, if you look at the start of the October series, or you look at the start of the July series as well, they were net short. We had good series out there. However, the only change is in August when they were net long and we had a decent series, 3.5% odd. Let's see what November throws up. At the short point, I'm a little bit more comfortable in the FI as a net short on the index because that gives us an additional lever. Now, since that they're net long now, the institutional flows become even more important because there's unlikely to be any kind of short covering that will play out. Now, the congestion zone is around the 17,800, 17,850 and also towards that 18,050. I say that because yesterday you had a couple of strikes that were very active. 17,800, 18,000 call between them. They added more than 40 lakh shares. But there's good support at lower levels. 17,500, 17,600. A couple of reasons out there. 17,700 put continues to get written and the 50 DMA as well comes in out there. Now, the US Fed meet, that's scheduled for next week and that's going to be the biggest trigger and that's really going to set the tone for the November series itself. Because the bulls or the global equity markets, they have been factoring in some kind of cooling off, whether it's in commentary or something on those lines. The 10-year yield has cooled off, the dollar index has come back to around 110 on, and as Lata said, a couple of senators as well have put in their vote that maybe that tightening needs to cool off a little bit. So let's see whether or not that comes off. If it's a disappointment, then we're heading down again from there. But if there is some kind of dovish commentary that comes in, that'll be rather good news. For starters, SGX is suggesting a start in the green, 17,800, 17,850, again a resistance zone.
Okay, let's see, right? We're at the upper end of the trading range. And yesterday, after so much volatility intraday, one thing is for sure, that this market is going to be quite volatile. That last hour bump up that we saw, I mean, it was exciting. It was exciting.
It was a typical expiry, Sonia, that played out. We went to 17,650 and in a matter of minutes, we were at 17,750, the intraday chart.
In the same light, that FII number should not be, assumed as actual flows. They're all adjustments for positions taken.
Yeah.
So, they have been putting in money in 3 figures, 3 digits. We shouldn't expect more than that as of now.
Yeah.
That unusual 2,000 crores is only a position adjustment.
Okay, there are also some big numbers coming through today. There's Maruti, there is Dr. Reddy's, there's Startup Power. So lots to talk about in terms of individual stocks as well. Let's do one thing. Let's kickstart the show. Our first comment comes in from Nilesh Shah of Envision Capital, who says that the earnings season so far has been very encouraging. He says it looks like inflation is peaking out in Indian corporate earnings. The outlook on the market is very positive and he expects FPIs to resume buying in India as soon as concerns on inflation start receding. Nilesh also says that manufacturing, defense, financials and consumer stocks could continue to outperform.
Okay, money market views. Bhaskar Panda of HDFC Bank says the ECB raised interest rates by 75 basis points yesterday to tame inflation in the Eurozone, causing the euro to fall against the dollar. In US, he says expectations of a 75 basis hike is built in now and recent US data shows a mixed bag. He adds oil prices are a tad down but still high on global uncertainties, while the IMF has spared Asian growth estimates. Against this backdrop, Bhaskar says recent mild appreciation of the rupee is expected to halt and readjust to today's realities. He expects the dollar-rupee pair to trade in a range of 82.40 to 82.60 for the day.
And on the bonds, Bhaskar Panda says the RBI has announced an unscheduled MPC in November first week. He says some rate hike expectations are entrenched and he expects the 10-year benchmark bond yield to consolidate in a range of 7.4 to 7.5%. The US yields have dropped and India rate expectations have built in.
Well, we have a lot of stock-specific action as well to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll look at SBI Cards, Tata Chemicals, PNB Housing, Aditya Birla Capital, Anupam Rasayan, as well as Gokaldas Exports. They are stocks on the back of positive news flow, while you have Sun Pharma, Indus Stars, Supreme Petrochem, and Vibe Global. They are stocks that are likely to open up in the red.
Okay, well, with that, let's put all the global cues we have to an expert to tell us how the markets will read them, ought to read them. Ed Yardeni, president at Yardeni Research, joins us now. Ed, good evening, and thank you very much for staying up for us. Can you just parse for us the GDP data and the fact that inflation has come in lower than the market estimated? Will this lead to some change in the Fed's positioning in December?
Yeah, I don't know that the Fed is going to change its mind based on the GDP numbers, but we also had some numbers that suggest that up ahead here, looking into the fourth quarter, we're going to see somewhat slower growth, but also see somewhat lower inflation. Inflation is really what this is all about. And I think the Federal Reserve is committed to 75 basis points at the November meeting. I think they're going to go for 75 basis points at the December meeting, but soften that up by indicating that they are going to pause in the first half of the year. And I think that's what the market is getting excited about, is that we're getting closer to the end of the tightening phase. We're at least getting closer to a pause, let's put it that way.
Okay, so closer to perhaps the end or the pause of the tightening phase. The bulls are pretty much back in control of this market, especially in a market like India, Ed. Do you reckon that that could be the order even over the next few months, irrespective of what the Fed does?
Yeah, I think at year end, I know in the United States, at year end, we have what's often called the Santa Claus rally. And the data shows that the Santa Claus rally, which typically, actually, the thought of Santa Claus is that it's from December to New Year's. But we've looked at the monthly data, and it actually starts earlier than that. October, November, December tend to be pretty good months historically, but they tend to be especially good when we have a midterm election in Congress, and that's what we have coming up in early November. So I think the combination of these things are positive for the market. Look, we discounted a lot of bad news in September, and I think the market overreacted. I think there's too much pessimism out there. And I think the year end is going to be a good one, both in the U.S. and in India.
All right. Hi, Mr. Yardeni. Good morning. In fact, Santa's been here in the Indian markets for a while, it seems. We have been relative outperformers, and if we can have a rally towards the end of the year, nothing like it. But what's your sense on the Indian markets and the outlook from here on? Valuation-wise, we're expensive, but we're offering best earnings as well.
Well, I think when I look around the world, I think when investors look around the world, they just see a tremendous amount of risk with what's going on in Europe, with the war, with what is going on with China becoming more autocratic and less friendly to businesses. So when global investors are looking for safe havens around the world, clearly the U.S. has been one of them, and we've seen that in the strong dollar. But another one in emerging markets has been India, and we've seen that in the India stock market.
Ed, how do you read the tech results? Are they, the market may have been done with worrying about the Fed tightening come December, but should it start worrying that the tech results are a pointer to other results also beginning to underperform, other companies also beginning to underperform come next quarter?
Well, these large technology companies, let's call them the mega cap 8, we all know that there's 8 stocks that basically account for, well, they accounted for 25% of the market capitalization of the S&P 500. The way it's going, within the next few days, they might account for maybe 20% of the S&P 500, but that's still quite a substantial representation in the S&P 500. I'm actually very encouraged to see that the market's holding up pretty well. It looks as though the money is leaving the mega cap 8, the large tech companies, and moving to some of the more traditional Dow Jones members, including things like Caterpillar and Honeywell. So that's an encouraging development, is that we're not seeing right now money leaving the market because of disappointing earnings coming out of the big tech names. We're seeing money just shift around to other ends of the marketplace. And I think that's a healthy development.
Ed, what is the number you said? The 8 stocks comprised 24% of S&P market cap. What is it coming down to?
Yeah, the mega cap 8, the largest technology companies, accounted for 25% of the market capitalization of the S&P 500 at their peak last year. And now I think it's the way it's going, it's probably coming down to about 20%, which is still a remarkably high percentage for 8 stocks.
Okay. Finally, then, before we let you go, what is the preference towards emerging markets? Or which is the market that sort of tops your list in the pecking order? And do you see outsized flows towards a market like India?
Yeah, well, I'm not saying this because I'm on your program in India. I'm saying it because I do, in fact, believe that the market action demonstrates that investors are bailing out of China, and rightly so, because there's contractual rights, business rights, the right to do business without the interference of the government. That's kind of disappeared in China. And so it's become a very hostile environment for stock investors. And as they look around the world for other emerging economies, I think India clearly has been at the top of the list for most of them. The only problem is at some point India is going to get overvalued and will need some sort of correction. But certainly from the point of view of freedom to run business without a tremendous amount of political intervention. I mean, we all have it in every country, but compared to China, India looks pretty good.
Okay, good to hear that, and that's a great note to end this conversation. Ed Yardeni, thank you very much for joining us with your thoughts. Okay, we could take a quick break, and we're going to come back with our entire research team to detail the top stocks on our list of top 10.
Well, this morning, the SGX Nifty is indicating a bright shade of green. Look at that, up about 63 odd points. Lots of positive cues as we wake up this morning. The Nifty, remember, has given gains of over 900 points in the October series. But our research team is here to tell you about the stocks to watch out for as we head into trade today. SBI Card is the first one on our list. Abhishek is here with the fine print. Abhishek, morning.
Morning, Sonia. So to begin with, SBI Card over the last few quarters off from Q1 FY21 to now has seen its revolver rate or loans which become overdue fall from 45% to 24%. So this has had its impact on the yields. The yields have declined sharply from 22.8% back in Q1 FY21 to right now about 15.1, and hence you have taken a hit on the net interest margin as well, which has fallen anywhere between 650 to 700 basis points during the same period. So credit cost remains elevated at 5.6% versus 5% in the previous quarter. They have seen their asset quality improve. Largely, it may be on account of write-offs undertaken. The total income is up 28% YOY and about 5.8% sequentially, while the PAT is up 52.5% YOY and down about 16.2% quarter-on-quarter. The PAT has come in around 526 crore, while Motilal Oswal estimated the PAT to be at 590 crores. Back to you.
Okay, thanks a lot for that, Abhishek. Point taken. But just to play devil's advocate, SBI Cards was also at the receiving end of a lot of RBI changes on credit cards. If you remember, tokenization, as well as weeding out unused cards. It affected all banks, but for SBI Cards, this is the only business. So it tends to have perhaps some impact. We should have to ask the management what are the one-off impacts of these rules. But with that, let's go over to Indus Tower's numbers. Vivek is here to tell us the key takeaways. Vivek.
Well, Indus Tower is in focus on the back of its Q2 results. Now, we had highlighted earlier about how collection challenges that the company was facing in terms of receivables from Vodafone Idea is something that could mar this quarter. And along those lines, the company too has reiterated the fact that collection challenges from major customer, that is, Vodafone Idea, is something that continues to impact its results. Now, when you're talking about the revenues came in above the CNBC-TV18 poll, coming in close to 7,967 crore. Margins, however, came in below expectations, coming in at 35.3%. The core EBITDA too came in below expectations, coming in at close to 2,812 crore. And when you're talking about the profitability, too came in much below the CNBC-TV18 poll. Now, when you're talking about what exactly has happened, the company has once again gone ahead and made a provision of close to 1,770 crore against Vodafone Idea receivables in the second quarter. Remember, this is in addition to the 1,230 crore provision that it had made in first quarter. So clearly, most of the analysts too are highlighting the fact that this resolution of these dues and receivables from Vodafone Idea would be key going forward as far as Indus Tower is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Sonal. She's here to tell us about Tata Chemicals. Well, so Sonal, it was a bit of a mixed set of numbers, right? Top line much better, but margins a little lower?
Margins were a little bit of a miss against what the street was working with. So on a quarter-on-quarter basis also you would see a decline, but the management commentary is quite strong, and that's why I'm going with green today. Also, we'll get more details on the conference call today. In terms of numbers, a revenue growth of 40%, EBITDA was up 84%, margins, they expanded 500 basis points. The expectation was of a 800 basis points increase, and that's why that miss. Profits were up 176% this time around on a YY basis. Now, the company says there were higher realizations, especially in their export markets, that is the overseas units. That is because of higher pricing. Gas, coal and freight costs, though at higher levels, have stabilized from current levels. So that is very positive, because the biggest fear for Tata Chemicals was higher raw material costs, because they have a big exposure to Europe as well. And more management commentary is something that we'll get on the conference call at 12 today. All right, thanks a lot for that. The stock has actually had a pretty decent run. I mean, from 790, which was the low in June, it's now all the way at about 1200 levels on Tata Chemicals. So just keep your radar on that stock. Very good set of numbers. But of course, margins slightly lower than what the street was estimating. Let's go across to Ekta now. She's tracking Sun Pharma and Taro. Ekta, how did it look?
Well, for Taro, which is basically Sun's US arm, came out with what was a disappointing set of numbers. So the revenue was absolutely flat on a year-on-year basis, operating loss of $6.81 million and a net loss of around $2.8 million. It was due to price decline, and it did not really, the revenues did not rev up despite a recent acquisition as well. So the street seems to be a little worried about what Sun Pharma could report, especially in terms of the EBITDA on November 1st when they come out with their numbers. There could be an estimate of around a 5% plus miss to the analyst estimates, which are already factored in terms of the Taro numbers before they came out for Sun.
Okay, all right. Thanks for that, Ekta. Well, let's hop across to Abhishek. He's here to track a few more numbers. Abhishek?
Well, Nigel, to begin with PNB Housing, for the first time in last 14 quarters, or the highest loan growth on a sequential basis on balance sheet they have seen in this quarter. So asset quality has improved given the fact that provisions are elevated. So it looks like there has been a write-off. Disbursals remain strong at 21.5% YOY and about 4.1% sequentially. The net interest margin and spreads are at 23-quarter high. There may be one-off, we need clarity on the same. Net income is up 30.3% YOY and 50.5% sequentially, while the PAT is up 12% both YOY and quarter-on-quarter. AB Sun Life on a sequential basis, the revenue is up 3% quarter-on-quarter. Operating profit margins remain flat at around 56%. The PAT is up 87% quarter-on-quarter. The quarterly average AUM is up 0.4% quarter-on-quarter. However, the equity portion in the AUM is up 2% on a sequential basis. Back to you.
Okay, thank you very much. Sorry. Thank you very much for that, Abhishek. We've more chemical companies. Sonal, you're back with Anupam Rasayan and Supreme, is it?
Oh, yes, I am. Anupam Rasayan, good set of numbers. A mild miss on the EBITDA front, but there's nothing to complain about in the numbers. Revenue up 25%, EBITDA up 45%. Margins are up 400 basis points for the company, with profit growing by 15%. Now, company says that they continue to see upward bias in terms of volumes to major clients of theirs, and they're also benefiting from the Europe Plus One theme that we've been talking about. And this is the reason why they have signed more contracts with European companies as well. The QIP raise that the company recently did will be used for a new project and also for fluorination pipeline. On the back of this, Jefferies has mildly increased their target price to 1,030 versus 1,000 earlier. I can't say the same for Supreme Petrochem because it was a very weak set. On a quarter-on-quarter basis, revenues are down 17%, EBITDA down 60%, margins are down 1,000 basis points, leading to a profit decline of 68% for the company. So that stock should be in the red today.
Okay, thanks a lot for that. Well, let's go across to Vahishta. She's tracking Gokaldas Exports and Vaibhav Global this morning. Vahishta, over to you.
Thanks, Sonia. For Gokaldas Exports, though the revenues have jumped by 28%, and remember this comes in a seasonally weak quarter, the exports run-up has been quite good. It's up 24% on a year-on-year basis. The company has highlighted that the US monthly apparel store sales have also been on a rise. The company has already incurred 51 crores of capex in the first half of the ongoing financial year. and plan another 106 crores in the second half of the ongoing financial year, while for FY24 it's going to be higher at 125 crores. Moving on to Vaibhav Global, the revenues were more or less flat, jumped just about 2%, while the margins have come in at 7.6% versus 10.7% in the same quarter of last year. The company has said that the customer base is at 4.9 lakh, which is up 5% on a year-on-year basis. The private label brands currently are at 25% of the global B2C revenue, which they plan to increase to 35%.
Okay. Thank you very much for that, Bahishta. Let's quickly recap all the top stocks that we have just discussed. Stocks with positive news flow, mainly results. Tata Chemicals, PNB Housing Finance, Aditya Birla Capital, Anupam Rasayan and Gokaldas Exports. Stocks where the results were slightly negative, SBI Cards, Sun Pharma, Taro of course, Indus Towers, Supreme Petrochem and Vaibhav Global. Well, with that, let's invite Manisha Gupta to tell us what we should know before trading about the commodity space. Morning, Manisha.
Morning, Lata. Thank you for that. Well, even with a bit of a profit taking, we are still holding very firm on crude oil prices, 88 for WTI and above $96 for the Brent prices. And the Brent is headed for a weekly and a monthly gain as well. And the monthly gains comes in for crude oil prices after 4 months of losses being posted. A bit of a dollar index gain above 110.5 is what's weighing onto the market. But the tight supply outlook, record U.S. exports, escalating Western sanctions on Russia, OPEC cutting output, and Chinese demand picking up are some of the factors which are supportive for the crude oil prices. So for the month of October, we are up by nearly 12% already for the crude oil prices there. It has been a good week for the metal prices also, where copper is headed for a third weekly gain. Zinc, aluminum, nickel, all of these metals are anywhere between 3 to 5% on the higher side for this week. And it's a double-digit percentage gain for some of these metals for the month of October as well.
Okay, all right. Manisha, thanks a lot for that. Well, we'll be bracing to hear from the Fed. But the RBI has called an unscheduled meeting of the Monetary Policy Committee on November 3rd. Is this significant, Lata? Should we worry about an unscheduled rate hike or not at all?
No, you should not worry about an unscheduled rate hike. The press release is very clear. This meeting is being called under, and let me give you that clause, Section 45ZN of the RBI Act. Section 45ZN was added only in 2016 when the Monetary Policy Committee was formed to make, to adhere to the inflation target. Now, what Section 45ZN says is, when the Reserve Bank fails to reach the target, it shall write a report to government, and in that report, it shall say the reasons for the failure to curtail inflation, remedial action that it plans to take, and by when inflation will be brought down. Now, obviously, Reserve Bank is not doing this alone. It's after all the MPC which is setting the rates. So they have called this meeting to discuss with the MPC what they should put in that letter. How market moving will it be? Not at all. My sense is it's going to be a non-event. November 3rd will come, November 3rd will go. Nothing will happen to the bond markets because the Reserve Bank governor has clearly said this report is privileged. It's meant only for the government's eyes. It's for the government to make it public or not. And it's possible the government will make it public at a later date. And then it may be market moving, what they say in that note. But on November 3rd, I'm not expecting fireworks. And I'm not expecting fireworks today either, because you ought not to expect anything in terms of a rate action.
Okay, well, that point is taken. No rate action expected. But of course, there is still that unscheduled meeting. So let's see what comes out of that. That's on November 3rd. We still have some time to go. For today, though, let's take a quick break. On the other side, Gurmeet Chadda of Complete Circle will be joining in for some stock talk. We will also connect with Sivaramakrishnan Ganpati, the MD of Gokaldas Exports, to discuss their Q2 earnings performance. Stay tuned.
Welcome back. It's that time of the morning when we try and analyze some of the important stock moving news, and we have An expert with us, Gurmeet Chadda, Managing Partner and CIO at Complete Circle, joins us. Good morning, Gurmeet. Pleasure having you with us. Thanks for that. May I start with the chemical stocks? Anupam Rasayan numbers were good, so were Tata Chemicals. Do you track the space closely, and are these results impressing you?
Yes, in fact, Tata Chemical is one of our portfolio stock in the PMS we run. I think while despite the run up, I think the stock still trades at about 15-16 times FY24 EPS. If you see the business mix, it's 75% basic chemistry, which is your soda ash, sodium bicarbonate, salt, etc. And 25 odd percent is specialty chemical, which also includes, the agrochemical business through Rallis and the new chemistries they are getting into, including the EV battery, etc. I think the mix continues to improve. The specialty chemicals, I think, going forward will form a large part of the mix. So if you see current quarterly turnover of 40 to 4,300 crores, almost 3,200 crores is basic chemicals. Also, the soda ash prices remain firm because the end use demand is very good, which is from glass and infra, etc. And also, there is no new capacity expected before FY25, which will support, the soda ash prices. And Tata Chemical is almost the third largest. So I think it remains a more reasonable stock within this space, and probably it can sustain few quarters. Probably you'll see more re-rating on the stock, the like we saw in Deepak and some of the others.
Okay, that's on Tata Chemicals. A good set of numbers. I wanted your thoughts also on SBI Card. The credit costs remain elevated for SBI Card, right? I mean, it's over 5.6%. But other than that, numbers are not too bad. Income growth of almost 28% year on year, profit growth of 52%. What do you do with a stock like this?
No, I think it's a mixed set of numbers, and I think we should not focus too much on revolver credit, because what happens is in the festive season, this ratio can get, slightly elevated or dispersed depending upon. So right now, because there's a festive season, I think once the spends mature, even the revolver share is basically people who don't pay full and keep rotating, right? And that contributes more to the card companies. I think if you see overall, I think whether it's in card in force or their spends by market share, they're still at 18-19%. I think what probably I want to see is that provisioning, and if that trends continue or just a one-time thing. And as Lata also pointed out earlier, that it's a standalone card business, so you have to be more, the impact on any regulatory thing is more pronounced, especially in this case. But very good names. Their ROAs have been around 5%. Valuations are not that stretched, and I think overall with this UPI integration, etc., and this is just a standalone play on card business. There's no other pure listed entity per se if you want to play the credit card business. So we remain constructive on it, not bothered too much by just one quarter blip on provisioning and revolver credit. Thanks.
Okay, all right. Gurmeet, request you to hang on. We just got a management that we are inviting right now. Gokaldas Exports. They posted a mixed set of numbers in a seasonally weak quarter. Revenue jumped up, margins contracted a wee bit. Mr. Shiva Ramkrishnan Ganapati, the MD at the company, joins us. Hi, Mr. Ganapati. Good morning, and season's greetings as well. I hope you had a good Diwali. Well, let's focus on the past quarter's numbers. First, they look pretty good. But my question to you is, in the Q3 of the last year, there was some inventory that would be lying with some of your clients. And that's what could put a bit of a cap on revenue for their third quarter. So could you give us a sense whether on a sequential basis we should work with, say, a 7 to 8% decline on revenues? Is that correct? And on a year-on-year basis, will the revenue number be more or less flattish at around 530 crores in Q3?
Okay, good question. So Q3 is going to be a quarter to watch. Globally, there is a lot of things going on. There are headwinds in Europe, headwinds in US, and headwinds in China as well, where retail sales is not so great. But the good news is, so far, the US market has held reasonably well. If you look at all the data till August, which is available publicly, retail sales data, retail e-commerce data, it has held up very well. Even the back-to-school season has held up well. So this year, 22 calendar has been better than 21 calendar so far. The key to watch is how does the holiday season sale, which is from Thanksgiving to Christmas, that sale happens. If that happens, I think the buyer sentiment will be strong and people will start buying again. As far as our Q3 is concerned, we anticipate, for sure, flat growth from last year. That's the area we're working on. And hopefully, if we are able to do it, we'll see if we can even post a growth over last year.
Okay, all right.
As far as the year is concerned, we are very confident that we should have a good growth this year over last year.
Oh, all right, a good growth, sir. That will be obvious because you've done so well in the start itself. But what do you end this year with in terms of a revenue number? Could you give us a sense out there? Will it be 2,200 crores, 2,300 crores odd? Point number one. And also, since the quarter is going to be a flattish quarter, say you do around 530 crores in Q3, what does it mean for margins? They are holding, as per our calculations, around 11.8%. You all calculated with other income. So on both these two factors.
So we will hold the margins, around that percentage. And for the year also, the numbers that you indicate, I think we should be able to do it comfortably.
Okay. Mr. Shivaramakrishnan, earlier you had told us that people had over-ordered in the previous season,
yes,
and therefore you would be stuck. But your second quarter numbers are very good. So
yes,
did you overestimate the problem? And secondly, are you expecting any reduction because of the onsetting recession, or so we are told?
Okay, so we did not overestimate the problem. I think we overcorrected from the problem. So once the problem was identified, we worked hard to make sure that we are able to offset the negative overhang of the inventory. The second point was the excess inventory was more in knits and other commodity products. We make very specialized woven products. So in fashion area, we still found the demand reasonably resilient. So we had that good fortune of being in the right product segment, and we continue to focus on that.
Okay. And any recessionary impact, impact of recession in the forthcoming orders?
So my sense is let's look, with just the quarter ahead. That's the fourth quarter. That's when we will be producing for summer of 23. Due to global warming, summers have been warm and summers have been long. That was the case in 22, and we don't anticipate any different 2023 as well. So if that is the case, then the demand for summer products should be reasonably robust. And we anticipate that for Q4, the demand should come back. The only point that we need to note here is the sentiment. So if the sentiment if the holiday season sales don't do as well, then sentimentally people will slow down buying. So we just hope that this holiday season sales do well, in which case I think we should start seeing an uptick from the quarter ahead onwards.
Actually, Mr. Ganpati, the last time when we spoke with you, you also indicated that there is a big shift that's taking place from China to India because of a low-cost structure. So can you tell us how much of that could benefit you, and what kind of long-term opportunity do you see? What could the sustainable long-term growth be?
Oh, it will be tremendous because cost structures in China are high. The geopolitical situation means that people are definitely and aggressively looking at alternate sourcing. So there is considerable, opportunity being scoured by the large brands, particularly the Americans, less so the Europeans, to look at alternate sourcing from India. We have seen several such situations where customers have come and asked for orders which are hitherto being placed in China. So that trend will continue.
So this capacity addition that you're doing that will end in FY23, is that taking into consideration this incremental orders that perhaps you could benefit from? Or do you think at some point in time you'll have to put some more capacity on board?
No. So we are building the capacity in anticipation of certain orders. Obviously, if the growth exceeds our expectation, we will not shy away from putting in more capacity.
Okay, all
so
right.
Shivaramakrishnan, there is a bit of a inability on my part to gel your performance with the macro numbers. The September exports showed a 33% fall in cotton, in textile exports. Cotton yarn, fabs, made-ups, handloom products. And even in man-made fabs and made-ups, it was a contraction of 4%. April, September also in cotton, if you looked at the 6 months, it was a contraction of 16%. So where is this falling? Are you in an outlier?
Okay. So if you look at apparel sales for the second quarter, that is July over September, our apparel exports fell by 6.3% YOY. Against that, we have grown by 29%. So it's one of the reasons is that large players who are able to deliver consistently, we are able to seek orders from and take away orders from competing countries. So we have more or less bucked the trend and carved out a space for ourselves.
All right, Mr. Ganapathy, at the halfway mark, you've already done 1,200 crores. So I had asked you about 2,200, 2,300. I mean, will it be better than that? I mean, it should be, right? What do you end this year with, first of all?
So I don't want to go out on a limb and commit a number, but we are definitely in that upper end of that range that you said.
So leaning to around 2,300 crores is what we'll take. You're given us a band, but leaning towards 2,300 crores is what we're working with. That'll be fair, right?
Yep.
But why can't you do better, sir? If it is 1,200 in the first half, can't you do 1,200 in the second half?
The thing to watch out is just the recessionary trends and the tough market conditions. There are so many imponderables which are way beyond our ability to forecast for now, right?
All right.
That's the thing.
Okay, Mr. Ganapathy, very quickly, we would feel that we have an Indian origin head now in the UK, and that FTA is something that you all were waiting for. I think that currently the UK accounts only for around 1% of your revenues. Say if that gets passed, then do you believe there's a huge scope for business out here? And
I strongly believe so. I strongly believe so. Most of the UK-based retailers are sourcing considerably from China and Bangladesh. Now, the cost delta between us and China, once the FTA comes in, will be another 10%. So that itself will propel more movement of sourcing from India. Bangladesh also, UK sources about 3.5-4 billion compared to, say, 1 billion from India. So there is net significant order movement which can happen towards India, I would say, of the order of 1 billion, and which means that the larger players can be a beneficiary of the FTA.
Okay, so putting all of this together, do you think that this 280 crore capex plan that you have between FY23 and FY24, do you think you can perhaps scale it up? What are you looking at, if at all, in terms of fresh capex that you plan to put on board?
No, so for now we are holding the capex at that level. We will see how the situation unravels over the next quarter, next half year or so, the global macroeconomic situation. If, let us say, the US faces a mild recession and moves on, it will be great. Then I think we will reconsider further capex. So we're not toning down our capex. We're not planning additional capex. This itself is a good amount from an expansion standpoint at the moment.
Okay, Mr. Srinivasan, we'll leave it at that. Many congratulations for a good performance and all the best for 23. Okay, Gurmeet, you were listening in. What do you make of the stock?
I think it's been a great turnaround under his leadership since Blackstone exited it in 2018. And, this is apparel exports. So they have like 37 million pieces capacity, and 80% sales is US. And they have some large clientele, including, Gap and H&M. So I think continue to do well. In fact, we interacted with him in one of the Motilal events, and he actually pointed out to 1,500 crore additional revenue through the capex they have done. And I think it gels with the overall big theme also, which is this China Plus One and the government focus on textiles through various initiatives, including PLI. I think there could be maybe a 1 quarter, 2 quarter hiccup in terms of how global trends are playing out. But some of it's probably in the price still at 13, 14 times FY24 earnings. So pretty reasonable. So we are quite constructive on this space.
Okay, Gurmeet, the place to be in the last fortnight has been banks, right? I mean, just look at the way some of these banks have moved. Canara Bank at a fresh high. RBL Bank was up 10% yesterday. From this entire lot, the broader market banks I'm talking about, which one do you still like for more upside?
So, you have to now start looking at, the corporate loan also along with the retail growth. And I think one bank which is standing out in the PSU space is SBI. They've been talking about, the unavailed limits of almost 6 lakh crore. the new corporate book at 1.5 trillion, which obviously largely is both tier and working capital. And obviously retail is picking up. So we like that. We also like IDFC amongst the smaller ones because, not only the retail book has grown 5x, both on deposits and advances, the legacy assets are also down. And I think some of these legacy borrowings will come down in the next 2 years, adding to NII. Still trades reasonably despite the recent uptake, and continue to like the old favorites, which is ICICI. I think HDFC is due. Once the merger hangover is done, probably some of it should come through.
All right. Thank you very much, Gurmeet, for these explanations. But please don't go away. We have more questions for you. A quick break, and the technical experts, Mitesh Thakkar and Shrikant Chauhan, will also join.
Welcome back. We're bracing for a good start on this Friday morning. SGX Nifty is indicating a 50-point bump up. So let's see whether or not we get that. But let's welcome our technical experts, Mitesh Thakkar and Shrikant Chauhan, join in. Good morning, gentlemen. Friday morning. Hopefully, we have a good weekend ahead as well. It's been a lighter week because we had a couple of days off. So pretty good news. But how are you all approaching the index? Mitesh, you go first. The FIs are net long. That's not happened, in the last couple of series. But we know when they're short, well, that causes a bit of a squeeze. So what are the levels you're looking at?
Morning, Najib. Last many days, we have talked about taking profits around the 17,800 mark. I think now is a possibility that we could possibly, we could look at, that the eventual breakout above these levels could happen. So today we might open around 17,800. In case we gap up, see some kind of follow through, and we start getting past 17,850, then I think we should look at an immediate test of 18,050 to about 18,100 to begin with, and then maybe even higher. So in that sense, I think, today I would not be in a hurry to take profits, but use the 50-point gap up as the stop loss. So I think yesterday's closing becomes the stop loss. And in case we see continuation, which I think is a good and a higher probability event, then I think, we will even add on to long positions once we get past 17,850.
All right. Shrikant Chauhan is also with us. Shrikant, good morning. You think this 18,000 mark is going to be here soon? And what is the level that you're looking at this morning?
Yeah. Good morning, Sonia. Good morning, Lata. Good morning, Nigel. I think, it's very much possible that we are going to see the levels of 18,000. And the reason is because the market has spent almost 3 days below the levels of 17,800. And while looking at the overall macro factors like the dollar index, or if we consider the 10-year bond yield, which was around 4.20, it's currently at 3.90. I think we are going to see upward breakout in the market. So the chances of hitting 18,000 are very high. We should be a buyer in the market with a stop loss at 17,700 on the downside. And for the Bank Nifty also, we are equally bullish. We are expecting 42,000, 42,300 in the near term.
Okay. Thanks for that. Shrikant, let's get to the individual stock strategies. Mitesh, what do you have on your plate?
Morning, Lata. More of buy calls today. I have a buy on Dixon Tech with a stop at 43.50 for targets of 45.20, 20.25 on the upside. DLF is a buy as well. Keep a stop at 374. Look for targets of 405, and a buy on Concor or Container Corporation of India. That's a buy with a stop at 773 for targets of 825. The solitary sell call which I have is on Emphasis, which I recommend selling with a stop at 2005 for targets of 1890.
All right. And Shrikant, what about you?
I think, we need to focus on those stocks which are part of Nifty 50 because we are expecting upward breakout. So Titan looks good, which is currently trading around 2,700. There we are expecting stock to move towards the levels of 2,800. So it's a buy at current levels with a stop loss at 2660 on the downside. And the other stock which we like is Bharti Airtel, and it is consistently forming higher top, higher bottom. And in fact, it has broken all-time highest level, which was around 800 some few days back. So broadly, we are expecting stock to move towards 850. We should look for adding this stock at current levels with a stop loss around 800.
Okay, thanks a lot for that, Shrikant. That's Kotak Securities with their stock ideas. Chandan Taparia is also joining in to give us some views. He's the derivative and technical analyst at Motilal Oswal. Chandan, good morning. What are your thoughts on the market and what are the individual stocks you're looking at?
Good morning, Sonia. We have seen good movement in the last series. And finally, the Nifty closed with decent gain of 5% with outperformance in Bank Nifty index. We believe that overall base of the market is shifting higher as FI's long short ratio again climbed from 15-20 marks to now 60%. So we believe that higher base could take it towards 18,000, 18,088 level. So we suggest to continue to be on long side in Nifty with support of 17,550 and expecting this momentum to extend towards recent swing high of 18,080 marks. Now, if we talk about Bank Nifty index, we believe that in just next few hours or in few days, Bank Nifty is all set to hit the new lifetime high. So with support of around 41,000, we believe that Bank Nifty could cheer up to the new lifetime high of 41,840 level. We have seen 76-77% rollover in both the indices. Longs are already there, but the good part is that FI's long short ratio is increasing with decline in the India VIX, which clearly indicates that bullish undertone could continue in the Indian market. Now, talking about the stock specific, a good momentum started to seen in the counter. So first it is buy on Sun Pharma. This is one of the strongest pharma counter making higher tops, higher bottom formations. We have seen around 85% long rollover, and the formation which clearly visible indicates 4 to 5% momentum cannot be ruled out. So recommending to buy on Sun Pharma with a stop loss of 988, and here we have a target was 1050 level. Second trade that is buy on Bharti Airtel. This stock has recently given a breakout. Slow and steady, it is making high rise, high lows. On weekly chart, it has formed a perfect bullish candle with rising delivery and trading volume. So recommending to buy on Bharti Airtel as well with a stop loss of 798, and here we have a target of 845. Last trading ideas, that is on Cement Pack, buy on Ambuja Cement. This stock has been consolidating from last 20 trading session, and we believe that now consolidation breakout should happen, which can add the movement of 5 to 8%. So most of the cement counter now started to witness uptick after the long consolidation. So Ambuja could be the outperformer. A small follow-up could cheer up further momentum. Can buy with a stop loss of 518, and here we have a target towards 550, 555 levels.
Okay, thank you very much for all those strategies, Chandan, and have a great weekend yourself. We may not be able to speak to you before that. With that, we'll take a break and we're going to come back with the pre-opening rates. We will also be joined by Rohan Verma, the CEO and Executive Director at MapMy India, to discuss their second quarter performance.
Brought to you by LIC. हर पल आपके साथ।